JPMorgan Chase stepping in to buy First Republic's assets after the failed regional lender was seized by regulators. Now, the acquisition includes $173 billion of loans and $30 billion of securities. And also the stock, First Republic, is going to be delisted as a result. Yahoo Finance's Josh Schafer following this story for us. And Josh, you've been digging into the implications here for First Republic shareholders. What did you find?
Yeah, so it depends on what we're looking at to some extent too, right? So we should make clear. First, we'll talk about the institutional investors. And so a key distinction in what happened today is JPMorgan did not assume First Republic's corporate debt or preferred stock. Those are usually institutional investors. So those investors are not going to be made whole. Now, on the retail side, those stockholders now need to go to the FDIC. So that's the key difference here between, say, JPMorgan just buying First Republic. JPMorgan did not just buy First Republic. First Republic was seized by the FDIC, and then JPMorgan bought some of the assets from the FDIC. So First Republic shareholders now need to go to the FDIC and file a claim. And really, Shauna, what the sad part is here for stockholders, for those retail investors, is they'll be fourth on the list of four for creditors of people that get paid out. They are at the bottom of that list. You can see stockholders there coming in at fourth, behind depositors and behind some other creditors as well. And one other thing that I wanted to point out is, so while they can file, analysts are already saying the likelihood of people getting their money back is really just unlikely here. Wedbush said that they expect a, quote, wipeout of common shareholders. Yeah,
which is crazy. When they started this banking crisis, right around $115 a share. Josh, when it comes to JPMorgan taking over First Republic, CEO Jamie Dimon making some interesting comments, maybe you can put it that way, about the future of the brand. And the brand, it doesn't sound like, has a future at this point.
He said the brand is going to eventually be gone. So what's happening right now today is First Republic banks are open. Your deposit should be in there if you were using First Republic, but eventually that bank is not going to have First Republic's logo on it, and you're not really a First Republic customer anymore. You are a JPMorgan customer. And one other thing I did want to point out, Shauna, that while we're talking about the retail investor, you sort of just brought this up, is just, I think it's interesting to take a look at that chart over the last month, 3 months, year to date. When you think about First Republic stock, that stock was trading at $115 back on March 8th and March 9th before this crisis started. So really it was a legitimate stock to hold. And I think that's an important part when we talk about what eventually happens to retail investors here, is to always sort of know what you own, right? And that has really crumbled in just less than a month. And I think it's relevant that it's not, First Republic wasn't a meme stock 2 or 3 months ago. This was a real crisis that played out, and something that you can follow along with in the news sort of as that stock price drops, because it certainly has absolutely dropped, and it closed today at $350 and won't ever be open again.
Yeah, it's astonishing really to look at that chart, see where it ended trading as of Friday afternoon, stopped trading today, and where it was just about a month and a half ago, not too long ago, 6 weeks ago, at just around $115 a share. Josh, what about just the investor story here? Because I think going back to kind of the windfall, what has been the last 6 weeks, lots of questions about the stability of the banking system, the risk here for regional banks. But when you take a look at the broader market action, the 3 major averages, they're not too far from the flatland. And when you take a look at a lot of the individual movers stay inside the regionals, we're not seeing that massive drop that we saw after Silicon Valley.
You're seeing some confidence in the market that this was a First Republic problem at this point. And Jamie Dimon pretty much said as much of this. He said you'll probably see a little bit more fallout, but generally, I mean, he had that broad quote that everyone's talking about today, that the crisis is over, right? And so I think that that's what you're seeing play out in the market right now, was First Republic might have been, at least for now, the final regional shoe that people were really concerned about. And it's something that's been baked in too, right? They announced that $100 billion deposit loss last Monday. The stock tanked over the last week, but really it had been falling, like we said, for a month now. It had been in focus since they got that big loan borrowing from those big banks. So it wasn't a new, surprising story, and it certainly is promising to see the other regional stocks, as you said, holding up for now.
Yeah, it certainly looks like investors are at least looking at this as an isolated event. All right, Josh Schafer, great stuff. Thanks so much.